Hey there, future entrepreneurs. Welcome back to our series on starting your business with zero investment. In our last episode, we talked about angel investors, individuals who invest their own money in startups in exchange for a small share of ownership. But what if your startup has already gained traction and you now need a much bigger investment to scale up fast? That's where venture capital comes in. What is venture capital? Venture capital, VC, is funding provided by investors who believe in the high growth potential of a startup. In exchange for their investment, they take a share of ownership, equity, in the company. Unlike angel investors, who invest their own money, venture capitalists usually manage large funds from other investors. They invest big amounts, but they also expect big returns. But here's the exciting part. Getting venture capital doesn't just mean getting money. VC firms also provide mentorship, industry connections, and strategic advice to help your startup grow even faster. How can you get venture capital for your startup? Getting venture capital is not easy, but if you have the right approach, it's totally possible. Here's what you need to do. Develop a strong business idea. Before you even think about approaching investors, make sure your startup idea is scalable. Can it grow quickly? Unique. What makes it different from competitors? Profitable. Does it have the potential to make big money? Venture capitalists only invest in startups that can grow fast and make massive profits, so your business should have that kind of potential. Prepare a business plan and pitch deck. Investors don't just invest in ideas, they invest in well-planned businesses. Your business plan should clearly explain your market opportunity, your revenue model, how you'll use the investment to scale up. Your pitch deck should be short, visually appealing, and include what your startup does, how big the market is, how you plan to make money, how much funding you need. Find the right investors. Not all venture capitalists invest in every type of business. You need to target the right investors who specialize in your industry and business stage. Some of the best ways to find them. Look at VC firms that have funded similar startups. Consider seed funding platforms and startup accelerators. Check websites like Crunchbase, AngelList, or Yourstory, India, to find active investors. Network and build connections. VCs don't invest in strangers, they invest in startups they trust. Attend startup events, investor conferences, and networking sessions. Join startup incubators and mentorship programs. Connect with successful entrepreneurs who can introduce you to investors. Pitching to investors. Once you have investors' attention, you need to sell your vision. Keep your pitch clear, confident, and engaging. Focus on why your startup is unique and how it will make money. Be ready to answer tough questions about business risks, competitors, and financial projections. Remember, investors hear hundreds of pitches, make yours stand out. Due diligence and negotiation. If a VC is interested, they will deeply analyze your business before investing. They'll check your team, market, competition, business model, and finances. If they're satisfied, they'll negotiate the investment deal, how much money they'll invest, and how much equity they'll get in return. Tip: be careful with how much equity you give away. You want funding, but you also want to retain control of your company. Scaling your business with VC support. Once the funding is finalized, the money is transferred, and your startup is ready to scale. But remember, venture capital isn't just about money. Most VC firms connect you with industry experts, help you hire top talent, provide guidance on business expansion strategies. If used wisely, VC funding can take your startup from small to a multi-crore business. What's next? Explore the Pradhan Mantri Mudra Yojana, PMMY. Now, here's something interesting. We've talked about crowdfunding, angel investors, and venture capitalists. But what if you don't want to give away equity in your company? Good news! The Indian government has a special scheme to help small businesses get loans, Pradhan Mantri Mudra Yojana, PMMY. In the next video, I'll explain how you can get a government-backed business loan with zero collateral. the different types of Mudra loans available, how to apply and get approved quickly. And now, tell me in the comments, if you had a chance to pitch to a VC investor today, what's the one thing you'd highlight about your business? Let's practice together. Until next time, keep hustling, keep building.